Hi there, how are you guys doing today? So today's tune-up webinar is going to talk about PPP, but we are also going to really focus on the employee retention credit because a lot changed after December 27th regarding the interplay between the PPP loan forgiveness process and the employee retention credit, all for 2020. And I'm going to focus strictly on 2020. And I titled this Monkey Wrench because this employee retention credit really has created a monkey wrench with respect to your PPP loan forgiveness. And it's creating a little bit of confusion and turmoil and quite frankly, just flat out problems for some PPP borrowers. So I'm going to try to simplify it. We want to take a step back and look at this kind of globally. And that's the purpose of this webinar. If you're not sure if you qualify for the employee retention credit, and by the way, I'm going to refer to that as the ERC a few times, so you'll hear those three letters. Don't immediately discard this. You really have to evaluate this employee retention credit issue because the new law really opened up kind of a can of worms, if you will, with respect to the tie-in between ERC and PPP, but it's really to your benefit. The employee retention credit can increase your cash flow by virtue of a refund on an amended payroll tax return that could be substantial for your business. So please make sure you look into this. It's one more thing you need to add to your to-do list, one more thing you might need to add to your CPA or accountant's to-do list, and certainly something maybe that you will need to work on with respect to your payroll service provider. I got to do a shameless plug for the PPP Excel workbook that we still provide. I'm real happy with that. We have updated it for all current guidance for both the covered period. Now that could be anywhere from 8 to 24 weeks. So, use that workbook if you can. It certainly can help you. The one other thing I want to plug real quick is this great employee retention credit guide that was not authored by me, but authored by Alan and his team, and it's really, really good. It boils down a lot of the information in a pragmatic presentation that's really easy to read. It's a good reference tool, and more importantly, there's almost 150 pages or so of reference material. All of the IRS frequently asked questions are in here. The copies of tax forms, how you report the credit, there's guidance in here on that as well. So it's a really good guide to use for both advisors and business owners that might want to look at whether or not they can take advantage of the employee retention credit. So what happened? What happened was that the act that was signed into law by the president on December 27th, particularly the Taxpayer Certainty and Disaster Relief Act, Tax Relief Act, which was in that giant 5,000-page bill that was passed, it kind of opened up this can of worms because it made available the employee retention credit. It expanded it essentially, both for 2021, which we won't talk about today. I'll probably do another presentation on the rules for the employee retention credit for 2021. Today, we're going to focus on 2020 and really think of it in terms like this. Think of the employee retention credit as really two separate things. There's a 2020 version and a 2021 version, and the rules are not the same for both of those. So you really want to kind of separate in your mind that 2020 is done a different way, different set of rules essentially. 2021 done a different way with different sets of rules as well. So we'll talk about 2021's credit maybe in another tune-up webinar in the near future. I do want to mention also that the IRS published previously a good deal of frequently asked questions. There's a link here for those if you want to go to the IRS's website. It's pretty easy to do. Keep in mind, though, that some of these frequently asked questions haven't been updated for the December 27th law change. So we might see some changes in those FAQs in the near future. So the big issue here is that when the PPP loan was made available last year, we were told that a business that got the PPP loan could not also apply for and receive the employee retention credit. So the employee retention credit, which was in the CARES Act, was designed to provide an incentive to employers to keep employees on the payroll during this COVID pandemic. The problem is that if you got the PPP loan, you didn't qualify for the employee retention credit. So everybody who got a PPP loan pretty much ignored and forgot about the employee retention credit. And now the new law allows us to get that credit, which means we have to go back to 2020 and investigate how this could benefit us. Now, how you qualify for the employee retention credit, there's really two ways to qualify, and I explain them just briefly here in the slide. The employee retention credit guidebook goes into great detail on this. The IRS frequently asked questions goes into a lot of detail, and I'm going to point out a couple things as we talk about these two ways to qualify. The first way to qualify is if your business was partially or fully shut down due to an order, a governmental order issued by a local, state, federal governmental authority that was based on guidance from CDC, HHS, OSHA, same old stuff we've said before. So if you're in a municipality that closed all non-essential businesses for a certain period of time, and your business is a non-essential business, then you are under a closure order. If you were in an area where, say, the state shut down all dining in restaurants. So if you're a restaurant business, you would qualify. Even if you were able to still do takeout and maybe even outdoor seating, you would still fall under the partial order. And that's, I want to really emphasize that you didn't have to be fully shut down to qualify. You just have to be partially shut down. And that's where we get a little bit of a gray area on some of these issues. The other qualification that you could make, and it's not an and, it's an or, is if your revenue declined by more than 50% in a particular quarter compared to the same quarter of 2019. So we all know the pandemic started really mid-March, essentially. That's what seems to be the commonly agreed upon date. So Q2 2020 was probably the first quarter we were all significantly affected by the pandemic. So if your revenue decline was greater than 50% in Q2 2020 compared to Q2 of 2019, then you would qualify. Now you might have not been under a governmental order to partially or fully shut down or affected by that, but you still qualify. So that's where I think this is really got to be looked at, because now we have to measure our revenue. They define it as gross receipts, but generally that's your revenue based on your accounting method. And we need to look at that for each quarter and see if we qualify. And if we qualify, then we could go to the next step. Now, if we were under a partial or full shutdown order, we would qualify for that period of time in which we were ordered to be partially or fully shut down. So it's all about timing, and it's all about measuring revenue and seeing which one works. Could you qualify under both? Yes, you can. So for example, if you were under a shutdown order for, say, April 1st to April 30th, okay, that's 1 month in the second quarter, clearly you qualify for the credit no matter what your revenue decline was. But let's say that in the second quarter, for the entire second quarter of 2020, your revenue was down by 54%. Now you qualify for the employee retention credit for all of the second quarter. That's April 1st to June 30th. So you can see these measurements of dates and how I'm affected and under which classification I claim the employee retention credit for qualification can be very, very important. Don't focus just on your closure order, focus on your revenue decline as well. We're working with somebody right now who will qualify for the employee retention credit for all quarters of 2020, quarters 2, 3, and 4, even though their revenue decline, I'll get into that in just a second, I don't want to get ahead of myself, but their revenue decline meets that qualification, but their closure order was only for a period of roughly late March to September. So if you based it strictly on their closure order or their partial closure order, they wouldn't qualify for all quarters, but because their revenue decline allowed them to qualify for all quarters, they'll use the revenue test. So really important that you look at both qualifications to see which one does the best for you. Now, with respect to the revenue decline test, I've given you an example here of a company whose revenue declined by 60% in Q2 of 2020 compared to Q2 of 2019. So therefore, they automatically qualify for the entire second quarter. Now, their revenue decline for the third quarter was 52%, so they qualify for that quarter too. Now, the interesting thing about the employee retention credit when it comes to your revenue measurement is that you continue to qualify for the credit until you have a quarter in which the revenue has recovered to at least 80% of the prior year quarter. So for Q4 in this particular example, ABC Company's revenue was down 14% compared to fourth quarter of 2019. So you might automatically think, well, I don't qualify for that quarter. But the way the rule works is that you actually do qualify for that quarter. It's the next quarter that you would not qualify for. So in this particular case, ABC Company now qualifies for the employee retention credit for quarters 2, 3, and 4 of 2020. So you can see, trying to figure out exactly how you qualify is probably the most important thing to do, and it's the first step in the process. Here's another example for XYZ Company. Now this one I twisted a little bit by showing that they had that 60% decline in Q2, but then they recovered pretty quickly in Q3, and their revenue was only down by 14%. So in XYZ's company's situation, they qualify for the employee retention credit for quarters 2 and 3, not for Q4, because Q3 is a quarter in which they recovered at least 80% of their prior year quarter revenue. Again, measurement really matters here. How you measure your revenue, how your revenue is reported, it really boils down to doing the math to see if you qualify for this. So that's the first step you need to do. And think of it sequentially. I've got to see if I qualify first under one or two of the guidelines. Which one do I qualify under? I want to use the one that gives me the maximum potential credit that I can get. And we'll get into the PPP in just a minute. So if my revenue did not decline by more than 50%, but my business was subject to a closure order, do I get the credit? And the answer is yes. You can claim the credit for wages that were paid during the time of the partial or full closure order. And that's good for all employers that have 100 or less FTEs, whether the employee was working in the business or not. So let's think about that for a minute. You have a restaurant and you have 20 employees, and you are under a partial closure order. Let's say you were under a full order for a period of time. Let's pick a date of March 15th, 2020 until May 1st of 2020. So under that period of time, you were under a full closure order. And let's say you had 4 or 5 employees you kept on payroll during that period of time. You will qualify for the credit for the wages paid during that entire period of time that you were under the full closure order. Then let's say after that, until such date as say September 1st, you were under a partial closure order. Maybe you couldn't do in-restaurant dining. You could only do outdoor dining and takeout or delivery or something like that. If your business was then under that requirement, you now could still qualify for the credit based on that time period. But what's interesting is at that point, you probably brought back more employees. Let's say you had 15 employees during that period of time. Now you qualify for the credit for all of those 15 employees, even though they were working in the business during that entire period of time. So you can see this credit could really add up based on your qualifications and how many employees you had. So that's something to really kind of keep in mind. Now, if your business employed more than 100 FTEs, you can only claim the credit for employees that you paid that were not working in the business. So that's a really important distinction that we need to make between large employers and small employers, if you will. The real issue is how this all plays in together with the PPP. Because there's one rule that you have to keep in mind is that we cannot double dip. We cannot get forgiveness for wages we paid and also get the employee retention credit for those same wages. So why that's so important is because we want to make sure that if we qualify for the employee retention credit, that we use the wages that we qualified for that, but yet still have wages left, if you will, to maximize our PPP loan forgiveness. In a nutshell, the employee retention credit is up to $5,000 per employee for 2020, and it's based on 50% of the eligible wages. So let's say that I have an employee, and let's say for the entire second quarter, April 1st, 2020 to June 30th, 2020, I qualified for the employee retention credit, and I have an employee that I paid $25,000 to during that quarter. I can use the first $10,000 of that employee's wages for my employee retention credit and get a $5,000 credit. So think about it in terms of the government just gave me a subsidy of 50% of that employee's wages up to the first $10,000 of wages. Now, the employee was paid $25,000 during the second quarter. What do I do with the other $15,000 of wages I paid that employee? I can use that towards my PPP forgiveness. So you can see that this calculation, if you will, of what wages to use where becomes incredibly important. If you got the PPP loan, say this company got the PPP loan on May 1st. So the month of April, they didn't have the PPP loan. They could clearly use the April wages for the employee retention credit. But what happens to wages that were paid after May 1st? Do I have to use those for the PPP forgiveness? The answer is no. Nobody has told us that we have to use a FIFO, a first in, first out method, if you will, for calculating wages for the PPP forgiveness. Remember, my PPP forgiveness is based on a covered period of up to 24 weeks. So what I might have to do is I might have to go out the full 24 weeks because I might have to pull wages from later on in that process to be counted towards my PPP forgiveness so that I can use wages that I paid early on in the process for my employee retention credit calculation. Now, one thing I want to point out here, it's very important, is that the PPP forgiveness is a 100% dollar for dollar reimbursement, if you will, for payroll. The employee retention credit is effectively a 50% reimbursement on the first $10,000 of payroll or of wages. So clearly, I don't want to take the employee retention credit such that it reduces my PPP loan forgiveness by something less than my loan amount, because I'm going to have to pay that back. So let me emphasize that. You're going to want to calculate your PPP loan forgiveness and maximize that first, and then see what you can use for the employee retention credit. Now, the guidance that we have right now tells us that on the employee retention credit, we're supposed to use wages towards that first. But there's going to be a mechanism that allows us to elect to use wages that would have otherwise been available for the employee retention credit to apply to the PPP loan forgiveness. I have not seen that yet. Once we get that information, we'll try to share it with you. For right now, I think it would just be a matter of you maybe telling the lender, this is what I'm doing. I'm making this election. So you are going to be in a situation where, let's say that you originally got the PPP loan. Again, let's just use May 1st as a date. You probably originally, back when this all started, remember we had the 8-week period. A lot of people were able to use the money in 8 weeks. Maybe they used it in 10, maybe 12. A few might have had to go out to the 24-week period. So in that circumstance, you might have already applied for forgiveness using, say, a 14-week period. So now you're going to probably need to go back and look at the possibility of having to amend your PPP forgiveness, because you're going to want to pull wages from a different period to use for the PPP forgiveness if you qualify for the employee retention credit. And that's what I pointed here, is that if you already applied for your PPP loan forgiveness, and in some cases I've got clients that I've worked with and people that I've worked with that have not only applied for the forgiveness, but have received the forgiveness. And that was done even before the December 27th date. So now what do? Now they've got to go back and look at whether or not they qualified for the employee retention credit. If they could get 100% loan forgiveness without using some or all of the ERC wages, then they're going to want to make contact with their lender to tell the lender that they want to amend the PPP loan forgiveness. But let's say that you couldn't get the employee retention credit, or you couldn't get full forgiveness on your PPP loan and get the credit. If you fall under that category, then you're just going to need to let the lender know that you need to formally make the election to use wages that qualified for the employee retention credit to be applied towards the PPP loan forgiveness. I'm not sure if you really even have to do that if you've already received PPP loan forgiveness, but maybe it's worth communicating that to the lender, because at some point we might need to document that. But in a lot of the cases I've seen so far, in just the last week and a half, what I'm seeing is that a lot of businesses can gain 100% loan forgiveness on their PPP and still get some, if not all, of their employee retention credit. So what I would recommend you do is I would recommend that you look at your PPP loan forgiveness using the entire 24-week covered period now, and kind of start at the end of the 24 weeks and work my way backwards. So let's say that I need 14 weeks of payroll to get my full PPP loan forgiveness, then I might use weeks 11 to 24 on my forgiveness, and then weeks 1 through 10 would be freed up to possibly use for the employee retention credit. I know that's really sounds kind of wacky and weird to do, because when you apply for your PPP forgiveness, you don't necessarily identify the wages. You don't say, well, I want to use these specific wages. You just send them your payroll documentation that shows that you used the PPP money for payroll, generally speaking, not specifically speaking. So now what I'm suggesting is that instead, we now really do specifically identify which payroll that we're using for the PPP loan forgiveness, and we specifically identify payroll we don't want to use for the PPP loan forgiveness. There isn't a mechanism to do that, by the way, in the application for forgiveness. We're going to have to do it in some format with the bank or the lender to let them know which payroll you're using. You could very well supply them maybe with just the payroll reports that fall into that covered period that you are allowed to use. So it's going to get a little bit challenging, but the point I want to make, and this slide you can see on the screen here is probably, the print might be so small that you can't see it. I'm actually going to bring up a screen share of an Excel workbook that we're using for the employee retention credit. I think you can see this one a little bit better, but here's just a really basic example of using Q2 2020 and showing how what the credit does mechanically. So this is a company that has 4 employees. They qualified for the employee retention credit. Here are the employees' wages for the quarter. Here's the wages that they had during the quarter, the second quarter itself. This particular company in this example actually qualified for the period prior to April 1st, because the retention credit actually took effect mid-March. So it's possible that you qualify actually for a couple weeks in the month of March for the credit. You would actually take that credit though on your second quarter Form 941. You would not file an amended return for the first quarter of 2020. So kind of keep that in mind. So Q2 is a little bit weird because you might have some carryover wages from the last couple weeks of March. So in this company's particular case, they qualified for the employee retention credit, and you can see that they have 4 employees, so they have a maximum amount of wages that they can use for the employee retention credit of $40,000, $10,000 per employee. In this particular case, the total amount of qualified wages they have for this specific quarter comes in at $33,750. That results in a tax credit of $16,875. So think about that for a minute. I'm going to get a tax credit on an amended payroll tax return to the equivalent of 50% of my wages that I paid these employees during this period of time I qualified. Now, if I got a PPP loan as well, I'm going to have to make sure that by taking these wages towards the credit, I then don't lose part of my PPP forgiveness. And like I said before, that's the true mathematical calculations that you and your accountant and your payroll service provider are going to have to work with. We're doing it now on a few people, and it's quite remarkable at how big the credit is coming in at for some of these businesses. And of course, then we're going to have to make sure that it doesn't significantly affect their PPP forgiveness. Keep in mind that the employee retention credit, because they give you the option of making the wages subject to, or applying the wages, if you will, to PPP forgiveness versus employee retention credit, you have the luxury of picking and choosing which payroll you want to actually apply to the employee retention credit. So this is found money for people who qualify. So it's really important that you do this and calculate what your potential benefit could be. Right now, the guidance seems to be that if we do qualify for the employee retention credit, the next step that you'll want to do is you'll want to file an amended payroll tax return to take the credit, and you'll get a refund. We're not sure how long it's going to take to get these refunds. We haven't been told by the IRS whether or not there's going to be any type of expedited processing of these refunds. Form 941X is the amended payroll tax return that you would file. In the employee retention guide book that mentioned earlier, there's specific references to the form itself that show where you report the credit. So it's pretty straightforward. The only thing you have to do is evaluate how much you can take in credit versus how much you need for your PPP forgiveness. If you did receive your PPP loan forgiveness already, you might have to amend it. We haven't been told yet what that process is going to be like. What I probably would advise you to do is that you reach out to your lender and you let them know, hey, I qualify for the employee retention credit. I know I already got my PPP loan forgiveness. I'm going to have to amend it. We don't know how we're going to do that yet. But in the meantime, you can get the ball rolling on calculating your employee retention credit and even possibly file those amended forms 941 to get into the queue for your refund to be processed, and then amend your PPP loan forgiveness later. I don't think that that'll create too much of a problem based on the circumstances we're in. So that's it in a nutshell. So if I had to give you any advice, is first go and look and see if you qualify for the employee retention credit. Now there's some rules regarding this partial and full shutdown issue. A lot of it's addressed in the IRS's frequently asked questions, because we've seen a lot of businesses that maybe were indirectly shut down or partially shut down because of what was going on in their community. So there are some decent guidance in the IRS's FAQs that give us examples on businesses that may have been indirectly affected by a shutdown order. And a lot of it references things like doing a facts and circumstances test and looking to see if a shutdown order nominally affected a business. So a lot of this is going to be a little bit subjective, where we might have a business that thinks they were subject to a shutdown order, but they technically weren't directly named in the shutdown order. If you're a business like that, let's say that you're a business that supplies or provides services to an industry that was shut down, then your business might qualify if you can prove that you were nominally affected by the shutdown order. So think of a business that might supply to the restaurant industry. Obviously, the restaurant industry, I think across this country, was partially or fully shut down in virtually every jurisdiction. So if you're a business that 100% of your revenue is derived from that industry, and you can show that you were significantly affected, then odds are you might qualify. So it's not going to be completely black and white for all employers when it comes to the shutdown order. And I actually am advising people to actually look at the revenue decline test first. If your revenue decline, if you meet the revenue decline test, then it doesn't matter if you were subject to a shutdown order directly or indirectly, you qualify. And it's so much easier because you qualify for the entire quarter. You don't have to worry about what dates the shutdown order were in effect, or or released or changed or anything like that. So it might behoove you to do the revenue test first, because if you qualify there, then you don't have to worry about whether or not you were subject to a shutdown order. If you don't meet the revenue test, then maybe look at the shutdown. If you are not directly affected by a shutdown order, but let's say that you were indirectly affected, but nominally, and again, nominally is a subjective term, I would probably suggest you look at your revenue decline. Maybe you had a 40% revenue decline and you service the restaurant industry. Is that ground sufficient to allow you to claim the employee retention credit? I really don't know the answer for that specifically. We might get a little more guidance from the IRS on this in the near term. So I would say at least keep your eyes and ears open for additional guidance and see what happens as far as that's concerned. You can always tell your lender for the PPP loan that you're kind of on hold with your forgiveness because you're investigating the employee retention credit issue for your business. That's going to wrap up today's tune-up. I'm going to come to you again weekly, again next Saturday. Next Saturday's tune-up is going to focus on the actual submission of the PPP forgiveness applications, and we'll actually do an example of a company that has a PPP forgiveness and an employee retention credit issue, and see how we back into the PPP forgiveness in a circumstance like that. Otherwise, you've got my email address if you have questions. I'm receiving a lot of emails and phone calls, so please give me a little bit of time for returning those or responding to those, but I'll try to respond to all of them as I get them. Thank you guys and have a great weekend.